Rahul, of course, is head of India and ASEAN Economic Research at BofA Global Research. Rahul, great to have you on NDTV Profit and chat with you today. Do you think there's room for more?
So I think there is room for more. I think the real question is, what is the right time to kind of deploy that particular room, right? And I think with the kind of uncertainty that's been there prevailing, especially from a financial market standpoint, and with the kind of numbers that we are seeing and the cause of those numbers, I think the RBI perhaps still will feel that there is room to kind of take a pause given the front-loaded action, and if need be, they can always deploy the limited policy space that the governor had alluded to in the previous meeting. But perhaps, after seeing how exactly some of the supply side variables, kind of pan out, right? So we are kind of going through a period where there is a lot of mixed evidence, as far as growth is concerned. And on inflation, clearly, there's a lot of comfort. So this does give room. But then we also think that there's a lot of room for patience as well, which the RBI has kind of been nudging us towards.
Okay. By the way, just a couple of details. We now formally have those listings. Rahul, just a moment. Just wanted to mark those because while Lakshmi India Finance, the new kid on the block, has listed at a discount, we do have Aditya Infotech starting with a 50% premium. Remember, it's a business or it's an IPO that got subscribed over 100 times, and hence this optimism around listing. Okay. Getting back, so Rahul, you laid emphasis on not on the room for the cut, but on the timing of the cut, as in when it were to happen. There's a lot of chatter, Rahul, around how inflation in the US might pick up, and because of this whole tariff piece, etc. And despite the trade deals that the US has struck, we are looking at a period of slightly higher inflation than earlier envisaged. How much would that play on the minds of emerging or ASEAN central banks? Because thus far we know they have preempted, or rather not paid complete heed to what might be happening in the US, but looking at the internal factors which are now more in control. Would the same happen going ahead?
Yeah, so at this point in time, with the fact that we have had a weaker dollar for quite an extended period, I think that has kind of given a lot of room for central banks, both in India and in Southeast Asia, to kind of preempt and cut ahead of the Fed. As you might know, Bank of America has had a fairly out of consensus call for a while of not expecting any Fed rate cuts through 2025. We continue to stick to that call. We think that, the fact that there is a higher tariff rate, effective tariff rate that the US is settling at, and at the same time, while the labor market is slowing, the stagflationary scenario probably does not give a lot of room for interest rates to come down in a front-loaded manner. So it's not going to be a cause of support. But certainly if the dollar remains weak, I think that gives a bit more wiggle room for central banks, as it was evident in case of India as well, that, there is room to cut. But then largely speaking, I would say the domestic environment is what is dictating this entire monetary policy cycle, both in India and in the rest of the region as well.
Okay. Rahul, what are the key points that you're looking out from the speech? I mean, the consensus is that there will be a pause, but what would you be watching out for, especially since inflation has been so benign?
Yeah, so I think the main emphasis is on growth, right? Because this particular monetary policy cycle was essentially triggered after the growth numbers started to weaken quite actively late last year and, in the first half of this year. Now, since then, we have seen both fiscal policy and monetary policy turn a bit more countercyclical. So we have seen, government spending pick up. We have seen rural activity remaining relatively resilient. And then monetary policy obviously has turned more accommodative. So I think while inflation is a necessary condition, it's essentially the expectations around growth that will anchor RBI's view. And inflation there becomes, I would say the pivot factor on which they can kind of give some guidance about whether, in the future, once the festive cycle plays out and, we see whether the economy is recovering or the economy is slowing down, then the RBI will basically use both a combination of low inflation and weaker growth to justify more policy action. We don't think that is something they are going to use that right now to do anything, but they will essentially lay out a path towards which, or conditions in which they can potentially cut rates. So I would look for dovish guidance from the central bank, but, a promise of sort of not acting now, but continue to watch data in order to gauge what can be done in the next 2 to 4 meetings.
Okay, that seems likely actually, because growth is going to be, and pushing growth is going to be on top of agenda now that inflation has largely been brought under control. Thank you so much, Rahul Bajoria. Pleasure speaking with you as always.